What's going on, guys? Let's do a little bit of a training here. We're looking at NVIDIA's 5-minute time frame. We're going to go over the way that I set up my charts for scalping. And we're going to kind of see exactly, where potentially we could have taken a trade, what we would be looking for, what we're going to use our stop loss as, and what's going to give us confidence to kind of take these trades in the future. So, today was a very extended day down. This example, essentially you could have gotten short on NVIDIA and, turned off your computer screen, did whatever for a few hours, came back and actually caught the whole $25 move. Now, again, no one's ever going to really catch the whole move, right? There's a lot of ups and downs, even on a big way down and on a big way up. So, what I really want us to focus on is that, even though we're down 25 points, but on the day, and it seems easy looking back in hindsight that you could have captured this whole move. Let's be realistic. But could we have caught in 2 points, 3 points, 4 points, and called it a day? Absolutely. So again, let's just get into how I'm setting these charts up, and you're going to see the power of, supply and demand, as well as trading with the momentum of the 20 period moving average. So the top orange line is going to be yesterday's highs on NVIDIA sitting at 469.20. We're also going to see yesterday's lows sitting at around 460.39. Okay, so we had about a 9-10 point range yesterday. The only reason why I did not draw a pre-market, dotted line at the highs was because it matched up perfectly with yesterday's lows. So there's no reason to double stack two lines here. I obviously understand that yesterday's lows is also going to match up with pre-market highs. Now we've got the pre-market low sitting at 453.35. Now, if we kind of look at where we opened up here, and I'm going to zoom this in so we could see this a lot better. But if we look here at today's price action, okay, look at the first 5-minute candle. What setup, right? What setup am I teaching over and over and over? It's the 20 SMA setup, right? Because it's powerful. It's very, very powerful when traded correctly and over a series of trades. Now, again, not every play is going to work out. Not every play is going to, make a ton of money. However, more times than not, over a series of trades, you will be profitable. So if we understand that pre-market highs and yesterday's lows is here, we understand that yesterday's high price is here. In order for us to get bullish on the stock and be looking for upwards moves, we would need to see the 20 period moving average rising, and we would need to see us break the pre-market highs and yesterday's lows to get back into the channel of yesterday between 460 and 469. Then I would say we've got some room to go to the upside, and I would have been looking for a long-sided trade. Being that we're trading below all of yesterday's range, and we currently lost off the open the 5-minute 20 SMA, what are we waiting for? Here's our reason why candle. Let me go and pull up the drawing tool. So if this is our reason why candle that we want to get into the trade, here's our 1-bar max pain stop. Here's our pivot. Look at the pre-market lows, the dotted orange line here. We also need to know that we're getting 3 confluences that are going to work in our favor. Below yesterday's highs, below pre-market highs and yesterday's lows. And if we confirm pre-market lows, that's 3 confluences all working together in conjunction with us being trading under the 20 period moving average. Your entry would be in this candle here. As soon as we break price action here through the pre-market lows, we have to sit through around 10 minutes of choppiness drawdown. But again, we have that hard 1-bar stop. And once we do finally start to confirm the pre-market lows, essentially this just continued to go all day long. Now, what I also want to show you guys is something like this, right? So the first move that broke through pre-market lows and confirmed this short entry here has a little bit of a dead cat bounce. I want to show you guys how perfectly the pre-market lows as well as a 20 SMA is acting as resistance now. Anytime you get the first initial leg, always look for the back test. It's just like if we're going long and we're looking for the breakout, we're always looking for the retest. So a break, retest, and then follow through, okay? The same thing for the short side. We're looking for the break, the retest, and then we would be looking for more continued follow through. This was an A+ setup. And if trusted the process and trusted your 20 SMA and trusted your reason why and trusted your confluences of being below each one of these supply zones, then essentially you could have taken this move initially on the break between a price of, you know, 453 down to around 448. So this was about a 5-point move here in around 20-25 minutes. Again, trailing it with the 1 bar stop, that's our max pain, and then using the 20 period moving average as your trailing stop loss here. If we do close over that and you're already up on the position, you can just kind of get out. Or if you don't feel good about the position and we switched directions, you can get out over the 20 SMA. So that's why I always use the 20 SMA to kind of trail. But again, just want to highlight this setup, wanted to highlight the moves and give you the reason why you would have been taking this trade and what you would have been looking for. I hope this video helps you guys. If you guys have any questions on it, make sure to hit me up and we can go over it in more detail. But again, I think that this setup on the video today was very, very clear. There was a lot of reasons why we should have been into this trade. There was a lot of reasons why we should have taken at least 2, 3, 4 points off this move. Now, again, I'm not going to say that we were going to hold it down to 433, but there should have been no reason why we didn't, you know, capture a little bit of this move. Again, you know, if the 1 bar stop was too much for you, you know, from 453 all the way up to around 458 is a 5-point stop loss here on this 1 bar stop. You know, you have to think about your 1 bar stop as your max pain, right? So we never want to get blown out of the water. We never want to, you know, go into significant drawdown to where we have no idea what to do and we're just constantly losing money, and kind of spiral and free fall out of control. So setting a 1 bar stop, regardless if it's 2 points, 3 points, 4 points, you know, this is going to be your protection. You know, anytime we enter into a trade, we have to be protected. So even if we traded shares, for example, let's use shares, and we traded 100 shares, which is 1 lot, we would essentially be putting on $500 worth of risk, okay? So $500 worth of risk would have paid out, okay, from an entry price of 453 down to 447, would have essentially paid out on the first leg a 1-to-1, okay? So you risk 500, you made 500. You sit through a little bit of drawdown, maybe you take some, you take half size off, maybe we're trading 50 shares now at this point, and you continue to take more size off every dollar down. That's how you kind of trail it, that's how you kind of use it, and that's what you're kind of looking for. Again, hope this video helps you guys. If you guys have any questions, make sure to reach out to me, and then we can sit down and go over this a little bit more in depth.